What's going on, you guys? My name is Zach Hartley, and in this video, we are going to look at my September watch list. What is currently in my portfolio? What stocks am I looking to buy? And what stocks do you need to stay away from? Here we go. Alright, you guys, so before we get into the technicals, I just want to show you how I am analyzing these stocks and what I'm actually looking at when I perform my weekly analysis. So I have my computer set up right here, and basically on this side right here, I have the 1 month, 1 hour time frame. So I'm looking at the stock on a very short time frame. In the top left corner of this screen, I have the different stocks that I can look at on my watch list. So as you can see, all of my screens are cycling through. It gives me a really great information thread here. And what I'm doing is I'm looking at it from a short-term time frame, and then I'm going to a 6 month, 1 day time frame, and then a 1 year, 1 day time frame. So I'm looking at it short-term to long-term, and then on the top here, I'm looking at the most relative index for that industry or for that specific stock. So when I look at Apple, I look at the S&P 500, for instance, and that is how I perform my analysis. And so then I basically just click through all of the different stocks, and I use a couple different indicators. So right now I'm using the RSI, I'm using the MACD, I'm using volume, and I'm using the moving averages. And that is how I determine basically which stocks am I interested in. From that point, I then enter in with different price levels to get more of an in-depth analysis on the stock, and then from there I try and figure out my entry and exit points. So I'm going to go through all of that analysis right now. I'm going to summarize it for you at the end, and I'm going to walk you through all of the opportunities that I'm seeing and the stocks that you should stay away from as well. So I will see you in a little bit. All right, you guys, it's a couple hours later. Analysis is over. Let's get right into the summary and show you what I'm looking at. So let's start off with just the markets in general. First of all, we're looking at the Dow Jones Industrial. I'm going to draw some price lines here. As you can see, we haven't quite recovered from the highs prior to COVID. But when you look at the NASDAQ, which is just absolutely unbelievable, the NASDAQ 100 has blown it out of the water. And the NASDAQ composite has also blown it out of the water. So technology is really the winner over the last 6 months here. It is really leading the pack, and that is where you want to put your money. In Canada, it's also a little bit different. So if you look at the TSX, we haven't even come close to our highs prior to COVID. If you look at the TSX 60, it's not even close to the highs of COVID. That's the kind of more focused, larger companies in the TSX. But where the good news is in Canada is if you look at the basically venture composite, basically the smaller exchange in Canada, it is blowing it out of the water compared to pre-COVID highs. So doing really well in the small cap, really small cap stocks in Canada, not so well in the larger cap stocks, and technology in the States is really leading the pack. So that is what the market summary looks like right now. Let's just jump into my portfolio real quick so we can see what our holdings are. All right, you guys, so I'm in my margin account right now with RBC. I have 2 positions currently, one with Air Canada where I took out my entire initial position. So this is just profits right now. That's why this profit number is so skewed. And then my second position is with Lululemon. I have call options on Lululemon that I purchased at the beginning of this month. They expired December 18th, 2020, and my average cost was $27. They are currently at $54. We are up 98% on this. Now, I gave you an update on this like a week or two ago, and I think it was at about 80%, so we made another 20% on these. Doing extremely well on these, so super happy with this. Now we are going to look into the charts and see if we still want to hold these or if we want to do something else with them. Okay, so this is Air Canada, and as you can see, the last 2 days have been extremely positive. We're at $17.99, possibly getting to that $18 mark next week, which would be really good for our options. Now, I do like these because I think we have support here at the 15 level, and I think we also have support here at the 16 level. So we've got 2 levels of support there. We just bounced off the 16 level. We're almost at $18. I do think we could have some resistance here at 18 to 18.50, but if we can get through that and a little bit more positive news in the airline industry, I still like Air Canada, so I am going to hold that one. Now let's take a look at Lulu. Okay, so this is the Lulu chart on the 1 day time frame. As you can see, prior to COVID, we had highs of around 264. We dropped down to 128, and then we have been skyrocketing ever since. We went from 128, and today we are trading at 377. Now the trend on here is just amazing. It's super consistent, it's super steady. However, we did have one rough day on Thursday, and if you look at our indicators here, you can see the MACD has had 2 or 3 days here where the averages are coming closer together. The RSI looks like it's coming out of the overbought zone, and the volume yesterday was lower than it was when it was a sell-off. So a couple of negative signs here with Lulu. So I'm not hugely confident that this run is going to continue, or at least it could take a dip. And on our position, we're up 98%. So this week, Monday, Tuesday, as long as we don't see any major action, any major movements, I'm probably going to sell out a Lulu and I'm going to lock in those profits. So that's my game plan for the positions that I hold right now. I'm going to hold Air Canada, I'm going to sell Lulu, and I'm currently doing a small account challenge where I'm day trading a small account from $1,000 to $1 million. So if you're interested in that, check that out. It's linked below. But let's start talking about the watch list for September. Okay, so the first company that I think you should have your eye on is Beyond Meat. Now, I've made a couple of really good trades with Beyond Meat, and I really like it. The reason why is because I think we're starting to find some really steady support here. So if you look back here to January, February 2020, you can see we had some pretty significant support around 120, 130, where it was some resistance, and we just couldn't get above it. Since then, we've come a long way, and as you can see here, we are now trading in that exact same range of that 120 to 130 zone, but that zone is now acting as support, and we are not falling below it. So what's happening right now is we've tested out this kind of 120, 122 zone for multiple days here over the last kind of 2 months, and we have not broken below it. So since then, we've broken above the 130 zone. We're currently at 131, and I think we have some upside with Beyond Meat. So I like Beyond Meat. I like the company long term, and I think there could be a trade here depending on how Monday to Wednesday go for us. After that, I want to look at Microsoft and Shopify because these are companies that I have highlighted in the past and they have a similar trading pattern going on right now. So, okay, so this is the Microsoft chart and this is one that I'm super interested in. As you can see, we've got a pretty clear upward trend here and we also have a double top. Now, since then, we have had a large, massive breakout to the upside. Microsoft has done extremely well, especially with the TikTok news and everything that happened last week. Huge breakout to the upside thanks to this ascending triangle. Really clear pattern. If you were able to spot this, you would have done extremely well on Microsoft. Now, where I think there could be an opportunity this month is in Shopify. What I think is happening is that we are seeing a fairly similar pattern play out. So as you can see here, we had a high right here that hit about 1076. Since then, we've hit about that 1100 mark. We've tested it twice now, but we have not been able to break through it. However, we still have a very clear, very strong upward trajectory. We have not been able to break through that 1100 mark. So if we see a breakthrough and a good test and possibly a rebound and bounce from that 1100 mark, I think there's an excellent trade to be had in Shopify. So I'm keeping my eye on that one this month as well. Okay, a couple of things I just want to point out in tech that are absolutely just insane. This is Square stock over the last little while. As you can see, in March it hit a bottom of about $32 and today it is trading at $155. Now this is a company that was a $60 to $80 stock for about 2 years, dropped to $30 during COVID, and then spiked up all the way to $155 right now. So I just want to point that out to you because it is companies like this that are leading that tech surge and that are leading the market right now in terms of what they can offer and what they can do for investors. It is all about these kind of plays, and I missed out on this one. I did not play it right, and now I feel like I got a little bit of that FOMO, so I am not going to buy in and I am not going to chase it. I'm going to wait till we see another correction, or I'm going to wait for something else to happen for me to get more confidence in thinking that there's still more room to run, because right now that is just an exceptional run and I have some reservations. Okay, so the next stock that I want to point out and the next stock that I'm watching right now because I like is Uber. The reason I like Uber is because with everything going on right now in the world, I think more people are going to be using ride-sharing services, and I think it is going to be more popular, and I think they are well positioned to do it. I also think Tesla could be in a good position to challenge them, but short term, I think Uber sort of has the dominant market share right now, and I really like that. So why do I like Uber? Well, it's because we've got some support and resistance building up. As you can see here, we are trading within a channel. This kind of $33 zone, $35 zone. We have tested it 1, 2, 3, 4, 5 times right now, and we've tested the low around $29 or $30 1, 2, 3, 4 times at least. So Uber is basically trading in this consistent channel right now, and as soon as we see a breakout or below that channel, I think there's an amazing trading opportunity here with Uber. If you look at this chart, it is just the most clear indication of a channel trading pattern, and as soon as we get a breakout, I think there could be some catalysts for some upward momentum, especially for Uber. I do think there's the same opportunity with Lyft, but it's just not quite clearly as defined as in this chart. All right, so my favorite chart of the day to look at was BILZ. It is Ignite Cannabis. It is ran by Dan Bilzerian, and I have done an entire video breaking down their financials and how much money this guy is stealing from the company. So if you want to see that, check out my video, subscribe to the channel. But let me show you the patterns I am looking at in this stock, and then you decide what you think of it. So this is the 1-day chart, and we are going back to, what is this? What's the date here? January 17th, 2020. So this is basically what the stock looks like on the year. Now, as you can see here, we have a pretty clear support line right here at this kind of 66, 67, maybe even 70-cent level. It hasn't really broken through that, but since then we have a very clear descending triangle pattern. Now when you look at this, you say, okay, like clearly something is going to happen right away. It's either going to break to the upside, it's going to break to the downside. Now, very clear trading pattern. The cool thing here is when you back this up and you look at this over a longer period of time, you can see that like this is just the start of it. So let me show you even further back. Okay, so now this is the chart that we just drew. You can see the descending triangle at the 0.6 level right here. Now, if you go a little bit further back, you can see another descending triangle here that is going basically right here. And as you can see, we had a major breakout to the upside, and now we have almost the exact same pattern that we did before. Now, if you zoom back even further, the pattern becomes even more astonishing. As you can see, even another one going down with a major breakup to the upside. And if you go back even further, oh boy, does it continue. So all the way to the open, you can see we've got a super clear trend line all the way here. And just the amazing thing about this chart is that all of them bottom out at the exact same level. So when I draw a price line here, you can see that the low of 0.65 is the exact same point that this stock is bouncing off each and every single time. So like, is it a pump and dump? I have no idea. Is it Dan Bilzerian going on his Instagram and saying, yo, everybody buy my stock? That could be what's happening. Every time it gets down to 60, 70 cents, Dan goes, hey, we need to pump this up a little bit. That could be what's happening. I am not here to say, but what I am here to say is, boy, are we getting to the end of these descending triangles, and it could be time to make a play to the short side. I do not want to go long on this company because I do not think there is anything good about this company. They are not making money. They are burning cash flow. Dan is taking the money straight out of the company, and it is absolutely ridiculous. So I may be looking at a short position on this stock this week. Let me know what your guys' thoughts are. I would love to hear from you. And if you got any value out of this video, please consider subscribing. I would love to build this channel to a point where we can share it with more people. So please hit that subscribe button, and we will see you soon.